Getting ready to get started. Getting ready to get started. Oh, yeah, get rid of that thing. Alrighty, that looks much better. There we go. Ooh, look who's here. Richard's here. Richard. NRG. What the heck does NRG mean? Uh-oh. Let's go here. Let's do that. Let's do this. Hiya, James. What's happening? Uh-oh. Move over. Just move it on over. Brandon. What's happening, Mr. Brandon? Kelly Elizabeth. How are you? Bama Redneck. What's going on? Inspire me more. Do you know why WBA decided to dip like 8% today? Well, we're going to take a look at WBA. Let's jump in right now. Take a gander at it. Alrighty. I don't have tissues. My. Alright, Richard Bruner. Thoughts for Kohl's earnings tomorrow. Cool. Well, let's take a look. Hold on. We are going to write down Walgreens first. WBA. Kohl's next. Thought this week was going to be tough, but premiums increased a bunch. Yes, it did. Wow. Gotta hate that post-nasal drip crap. Alrighty. Alrighty. So, let's get started. First and foremost, it is the 27th of August. My name is James. This is Dividend Stock Talk, where I talk about dividend stocks specifically for a safe, predictable, consistent 1% per week. Now, for those you don't know, those of you that are new here, this trading strategy came about when my 9-year-old daughter wanted to learn how to trade stocks. So, I had the challenge of coming up with something that was simple, safe, predictable, consistent, and no way that she could lose. So, came along with 5 rude dude. What's happening? So, there are 5 rules that went along with that. Rule number 1, never buy something you do not understand. It kind of defeats the purpose. Rule number 2, never sell at a loss. Wait a minute. Rule number 1, never buy something you don't understand. Okay, rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. I like to use dividends because dividends is a portion of the profits that goes directly to the investors. If that increases every single year, year after year after year, well, long and short, make a long story short, if they keep increasing their profits, well, consistently they're profitable. That's what that means, in my opinion. Rule number 4, make sure as weekly options. Now, when I say I want weekly cash flow, the only way I can get weekly cash flow is 1 or 2 ways. 1, companies that offer weekly options, that allows me to do weekly plays. Or 2, I can sit in front of the computer looking for stuff like this. Double top, head and shoulders, flags. Steve Cole. Do you think NVIDIA is going to go up tomorrow? NVIDIA. We'll take a look at it. NVDA. NVDA. We'll take a look at NVIDIA. Not that I trade it, but we'll take a look at it. Amy. Hi, James. Is it going to go dipper toward September? I'm not quite sure what dipper means, but okay. Got this stuck in my throat. Horrible. All right, so let's get started. The very first one. Oh, let's get the, what do you call those things? The disclaimers done and out of the way. Number 1, I'm not a financial advisor. I'm not a broker. I'm not a money manager. WJR. What's Henty? I have no idea what Henty is, and I have no idea why you're bringing it up. But it is what it is. All that being said, I have no licenses other than the license to drive a car. That's it. Drive a car, drive a motorcycle, drive a truck. Not a financial advisor, didn't go to college. I took the road less traveled. Got out of high school, joined the service. After the service, I started my own business. After that, I was a handyman for a while, ran a manufacturing company for a while, did some service work for a while. But other than that, I have no formal training in this whatsoever. I speak of simplicity, predictability, consistency, and safety. Those are the four things I'm looking for. I'm 60 years old. I'm retired. That means all the money I accumulated over my working life now has to last me for the rest of my life. So how do I do that? I invest in dividend stocks, and I look for a safe, simple, predictable, and consistent 1% per week. That's enough to satisfy my needs. Amy meant, is it going to go down towards September? Over. Okay. GD, good evening. I'm retired too. Cool Monji, Moog. I'm new here, so I don't know if you ever talked about this, but how much of our money, let's see what he has to say. That looked kind of interesting. He's new. But how much money of our money should we be invested on any individual trade? Well, that is an interesting question. And that is something I can't answer for you. Okay, everyone, Catyo, really? I'm retired too. Catyo! Age rule, yo. Okay, I have no idea what that means. I'm 60 also. Does it scare you to have that much invested? What the hell else am I going to do with it? Think about it. 98% of all my money. See, I've been doing this for a while, so it doesn't really scare me at all. Okay, so I invest in the American economy. Okay, U.S. Steel, IBM, AT&T, General Motors, Ford, Walgreens, Kohl's, Nordstrom's, Bank of America, Wells Fargo. Companies that have been around for a while. If I don't have my money invested, what the hell am I going to do with it? Put it in the bank and let it depreciate over time? Age 60, 40 stocks, 60 bonds. Yeah, oh hell no. I don't do bonds. Bonds do not pay 50% per year. Okay, I get a safe, predictable, consistent 1% per week. That comes to over 50% per year. Simone, how are you today? WA is getting very low. Yes, it is. And it's probably going to continue to get lower until they start getting an annuity. Oh, double hell no. I had a friend of mine who had an annuity. Someone talked him into it. The annuity paid 3% per year. 3% per year. I showed him and his wife how to do this, and now they get 3% per month. Okay? Every time I see her, she gives me a big, huge smile and a big, fat hug. She said, James, because of you, we got to spend 2 months over in Poland. That's where she's from. He's from here, she's from Poland. And she said it was a wonderful thing she's ever done, because now she can actually take control of her own money. Rather than getting 3% a year, she gets over 3% per month, and she's a happy camper. All right. JNW jumped with earnings. We'll take a look at JNW. JNW. All right, we'll take a look at JNW. So we got a few to take a look at. Hopefully, that gets rid of all of the disclaimers. I got one more thing for you. You ready? Now, I was watching some videos the other day, and this girl was complaining that she had 57 people that were pretending to be her. And I thought to myself, damn, I only got 27. I must be doing something wrong. They say if you don't have enough haters, you're doing something wrong. All right. Darwin Lee, do you invest into the S&P 500? Absolutely not. Okay? The S&P 500 is controlled by other people. The S&P 500 does not give a consistent 50% per week. Don't believe in quitting. Ooh, I like that one. Heartme1X. Cool beans. Thank you for that. Don't believe in quitting. Just go. Okay, thank you. Stay away from AT&T. They cut divvies. Okay, AT&T, the premiums really aren't that great, but they are over 100 years old, so I do give them some leeway. I will look at them when their dividends are coming up. If the numbers look good, what 0% chance of you guaranteed 3% per month. Greg, so please, I love negative people. I do, really. If you can give me a good reason why you think I can't get 3% per week, I'm all for it. Because I average over 1% per week, and that's over 50% per year. Retired from AT&T, I know they cut divvies by 50%. Give us your best dividend stocks, 5 of them. What stocks are you in your portfolio bunch? What about DJT? Sorry, DJT is a brand new company. I don't do anything unless it has 20 years of increased dividends. Okay, so my favorite stocks: Macy's, Kohl's, Nordstrom's, Walgreens, and what's the other one? Hold that thought. Monitor. Here we go. Macy's, Marathon, Walgreens, General Motors, and Comcast. Ooh, and I like Dell too. Caterpillar's nice, but I don't have any Caterpillar this time of year. All right, so that was my 5 biggies. Bama Redneck, Big Van. It doesn't work that way. His favorite stocks change every week. Yeah, but my number one favorite stock is Macy's. Consistently given. Ginger, how are you tonight? Nice of you to show up. Stay away from Walgreens. Why is Dell so volatile? Those juicy premiums are tempting. Well, Flipper, we jumped into some Dell yesterday. What's today? Today's Tuesday. Yeah, we jumped into some Dell yesterday. But we're going to take a look at Dell tonight also. Thank you for bringing it up. Dell. All right, so first one on the list is going to be question on Sony's chart. What causes the candlesticks to look like they do? Sony, really? S-O-N-Y. All right, Sony is. Do you analyze every day to invest, or you only invest at the beginning of the week? Darnaby, you are 100% correct. AT&T is in debt. Everybody's in debt. All right, Flipper, earnings his week, I think, Friday. All right, the way I do it. All right, now, some people get confused, and I don't know why. I think it has to do with age. Because when I say this was created for a 9-year-old, all right, it had to be simple, safe, predictable, consistent, all that kind of nice, neat stuff. Adults have a tendency to make it more complicated, okay? So the only stocks I like are companies that consistently increase their dividends. The Dividend Kings. 50 companies that have, wait a minute, 50, I think it's 54. 54 companies that have increased their dividends for more than 5 decades. They consistently increase their dividends for more than 5 decades. That's 50 years. Okay, that's my first top of the list. Second, the Dividend Aristocrats. 67 companies that have increased their dividends for 25 consecutive years. Dividend Champions, 150 companies that have increased their dividends for 25. That's a quarter of a century. Number 4, the Dividend Contenders. 300 companies that have increased their dividends from 10 years to 24 years consistently. Every single year, higher and higher and higher dividends. And then also we have Warren Buffett's list. So those 5 stock lists I just gave you should give you about 300 decent companies to look at. But Redneck, they are unreal. Every company has earnings. Okay, what are we talking about? Earnings this week, I think Friday. Okay. I really don't pay attention to earnings. I mean, some people might think that's crazy. I don't. I've seen positive earnings where the stocks go down. I've seen negative earnings where the stocks go up. It makes no real rhyme or reason. There's no definiteness to earnings. Positive earnings, it goes up. No, there's no definiteness there whatsoever. However, what I did find is What you see behind me is a dividend calendar. Okay, this is the month of August. Then we have Kinder Morgan, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo, Emerson, Hershey's, and a bunch of others. Now, I take a look at the list I told you about. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, and there's a few others. Most of those companies have increased their dividends consistently. They are put into the calendar by when they pay their dividend. So you have 300 companies, about, give or take. Out of those 300 companies, they all don't pay the dividend on the exact same day. So we'll take a look. January, February, March, first quarter. April, May, June, second quarter. September, October, November, third quarter. Is that right? Wait a minute. June, July, August. No, July, August, September's third quarter. October, November, December, fourth quarter. We are currently more than halfway through the third quarter. I want to take you seriously, but whenever I try to, I just think of Joey from Full House. I'm not quite sure if I should take that as a compliment or not. How do I find out what you're doing on Monday morning? Well, you can join the morning trading group. You'll find out that way. Jerry, thoughts on bloodbath that occurred today with Walgreens? All right, Jerry, Walgreens is on the list. We're going to take a look at that in a minute. Okay? To be totally honest with you, I haven't looked. Okay, I looked this morning on the morning trading group. We did a couple of trades this morning. Fine, we looked at where everything was. But I didn't notice anything happening with Walgreens, and I really don't pay attention to the stock market during the day. I do my stuff in the morning, and I move on. Okay, it's really bad. Well, let's take a gander at it. All right, so as I was saying, the 300 stocks I like to look at, you put them into a calendar. The calendar breaks it up into weeks. You have 13 weeks in each quarter. The first quarter, January, February, March, 13 weeks. The second quarter, April, May, June, 13 weeks. Third quarter, July, August, September, 13 weeks. Fourth quarter, October, November, December, 13 weeks. So week number 1 of the first quarter looks the exact same as week number 2. As week number 1 in the second quarter, which looks the exact same as week number 1 in the third quarter, and you guessed it, looks the exact same as week number 1 in the fourth quarter. I'm accumulating Walgreens. It paid a dividend, I believe, and the stock usually comes down. Yes, stocks usually go down after the dividends are paid. That's why I like to buy before the dividend and be out within the first week or two. Okay, so if I like a stock, I will take a look at it 2 weeks before the dividend. Look at here, down here, 3M, the 26th. Okay, now I'm going to take a look at 3M on the 12th, which is 2 weeks before the dividend is paid out. Why do you think that is? Well, because stocks have a tendency to increase in value before they pay their dividend. After they pay the dividend, they have a tendency to go down. So I've seen this anomaly 20 years ago, and I said, you know what, let's jump in and see what it looks like. Richard, when you do single-click covered stock, are the stocks and the call connected? Yes, they are. That's why I do them. Okay, when they're connected together, the premium's already preset, and I already know what my profit's going to be. All right, let's move on. Now, let's jump in and take a look at the first stock on our list today, and that is going to be tra-la-la, Walgreens. So someone said Walgreens has interesting stuff today. Well, let's take a gander at it. She did dip. Okay. A year ago, we were at 25.31. The top of the year was 27.09. Okay, 27.09, and that was in the end of the year. Okay, the end of December. From there, she's kept dropping till we get to this point here. She gaps down and then keeps on going lower and lower. Right now, we're at 10.45. Now, I have Walgreens at 12. So I'm in the same boat you guys are. But here's the thing. I sold my premiums. I sold my covered calls I got 11 cents a share, which is just a little bit below 1%. Walgreens is currently at a 27-year low. Well, that's got to be freaking awesome. Now, why do I call that awesome? Well, here's the thing. No, it's 9.45, not 10. Well, since below 10. Okay? Alright, so I think it's awesome. And the reason why I think it's awesome, number one, Walgreens is over 100 years old. Walgreens also has 8,700 stores worldwide. It's not a company that can disappear overnight. You do not eliminate 8,700 stores overnight. Now, the book value on Walgreens, I don't know what's going on here. Uh-oh. Something's going on. WBA into Yahoo Finance. And what do I want to look at? August. So we just had our dividend a little while ago. 48, 48, 25, 25, 25. Okay. I want to look at, what am I looking at? Oh, that's what I'm looking at. Statistics. Here we go. Statistics. I want to find out. All right, it's awesome. But low in selling, high. Advanced Auto Parts at an all-time low, and Intel. Okay, hold on, Andrea. Let's write those down too. AAP, Advanced Auto Parts, and Intel. INTC. Now, I do have Intel. I had Advanced Auto Parts, I think it was last week. Any small caps you like or aggressive growth? I'm young and I want to be aggressive. All right, David. Now, I'm going to burst your bubble here for just a smidge, just a little bit. You ready? Okay, David, this is not the right place for you, dude. Seriously. This is not for growth. Definitely not for capital growth. This is for cash flow. This is designed for safety, simplicity, predictability, and consistency. Okay, if you're looking to go from $1 or $2 up to $10, $20, $40 in big growth, yeah, this is not the right place, dude. Terribly sorry. Don't get me wrong. I love having young people here. It's great. So I'm looking at, Dave, do some research on UPST. Uh-oh. UPST. I'm going to have to take a look at it because I've never heard of it before. Okay, Dave, now you shouldn't be... that means I'll always be working, and I don't want that. Thanks. Well, Dave, look at it this way. I'm looking for cash flow, safety, predictability, consistency, all that kind of nice, neat, fun stuff. You won't like it. It is an IA loan company. All right, let's keep going. Travis, we're going to get to Walgreens in a minute. Well, that's what we're doing right now. Okay, so the book value for Walgreens at this moment in time is $15.80 per share. Okay, the stock is below 10, but the book value is 15 bucks. So you're actually buying a $15 per share company for less than $10. Now, granted, it's going to stay down this area for a little while until they figure out what's going on. What do I mean by that? Well, considering the current administration doesn't want to prosecute for crimes under 900 bucks, people walking into stores, filling up their pockets and walking on out, and nothing happens, well, of course, you're going to have crime sprees everywhere. So some of the stores that aren't as secure, okay? Now, Walgreens is not one of those stores known for having an armed guard or a security. So, they're having issues with crime. All right, fine. So now they're getting rid of the non-performers. When you have the non-performers done, gone over with, then you also have to look at it this way. Everything's moving online. So Walgreens is moving their stuff online. Fine. Get rid of these stores that don't work. And then, what is it going to take? 6 months to a year maybe? But if Walgreens keeps giving a nice premium, why not? Darbenly, Duracell, yeah, sorry, that's a private company nowadays. I believe Warren Buffett bought it. Okay, there's certain companies Warren Buffett bought. Fruit of the Loom, Duracell, Wrigley's Gum, Mars. You know, they make those candy bars. You know, the Mars bars and Snickers bars. Yep, he owns it all. All right, James, sorry. Sorry to disagree. Not sure I'd call it awesome. Walgreens could drop and not recover in our lifetime. Neil, anyone uranium sucks? No. All right, Secretariat. I understand that. I appreciate your input, but I seriously don't think it's going to disappear that quickly. Now, I could be wrong, because I do remember Sears and Roebuck used to have a whole bunch of stores, and they finally went out of business. But it's a totally different animal, though. Because Walgreens is 8,700 stores. I don't think Sears had 8,700 stores. And Sears wasn't 100 years old. All right. Let's take a look. Dave should have both income and growth. Okay, Andrea. Rich Bruner. Dave, if you don't need the cash flow, just reinvest to build a bigger nest egg. I'll agree with that one. Kamala is going to increase crime. Yeah, she probably will. Dave Howard, put $2,000 in a Roth and do $200 a month. Run the numbers at, say, 40%, not the 52, or by 30 years old. 30 years old. Okay, that works. Rich Bruner. Yeah, I understand his rationale, but I am tired of diversifying into these boomer stocks that make me lose to the S&P 500. Well, alrighty, Dave. Well, let's see if we can change that for you. Now, I buy, if you want to call those boomer stocks, fine. It is what it is. So let's finish taking a look at Walgreens, all right? Now, I told you I already have Walgreens at 12, okay? In this particular account, what do I have in the other ones? Yep, I have Walgreens here. Couple of thousand shares. I sold the 11s, okay? I sold the 11s, got 14 cents a share. That's over 1%. Remember, my goal is a safe, predictable, consistent 1% per week. Now, if I bought Walgreens, my average price is $11.47. Well, I sold the 11s, I got 14 cents per share. That's over 1%. I don't have a problem with that. I don't care how far down they go. If they're consistently giving me 1% or more every single week, I'm okay with that. Okay, in this account, Walgreens. I bought, that's weird, I bought a $12.50 call for January. Okay, want to get rid of that thing. All right, let's get back to where we were. All right, so here's Walgreens. A year ago, we're at 25. There's the high, here's the bottom right over here. Let's take a look at the last 30 days. Actually, let's go back a little bit further than the last 30 days. Now, we've been following Walgreens for quite a while. I remember when we were here back in June, we saw this bottom here and we thought that was the bottom. 2 days to the upside, good. I jumped in, we made a little money, and then she just drops here. We get to a bottom here, and I thought that was a 30-day bottom. 2 days to the upside, we jumped in, and we moved some numbers here. Then she went up, she went down, did it again, and then we did it again, and then we did it again, and then look what happened today. Well, we officially have a new bottom of the 30-day period, the 90-day period, the year, the 5 years, the decade. From what I understand from Secretariat, this is the low of a 37-year low. Now, it still has the book value of 15 bucks per share. Now, I remember about a decade, 2 decades ago, Ford was down to $3 a share. Ford, they get a book value of $14. They have the stocks dropped down to $3.50, and then a bunch of us just jumped on and bought a whole bunch of call options because that thing just went right back up again. It's over 100 years old, 37-year low. Thank you, Neil. So it's at a 37-year low. Do you really think they can get rid of 8,700 stores that quick? I don't know. It's a shot in the dark. Now, I'm not putting a huge amount of money into it. I'm just putting a decent amount of money into it, so I get a halfway decent trade, But that's me. All right. Dave. Oh, Bama Redneck. Dave Howard. I made 18% last month. Cool beans. Don't you eat up on capital gains tax? Travis. I love when people ask about taxes. If you're worried about taxes, that's the same as the person driving into a Rolls Royce dealership and ask, what kind of gas mileage does this thing get? If you got to ask, then you're doing something wrong. Okay? If you're worried about capital gains taxes, you really need to talk to a tax strategist. Neil, so I buy 500. Okay. It just doesn't work. Larry, I have no idea what you're talking about, what just doesn't work. What are we talking about, Larry? All right, Larry's saying something doesn't work. I have no idea what he's talking about. You use multiple accounts to maintain focus. No, I have multiple accounts because they're not all mine. I trade other people's accounts for them. Dave, month. Travis Sanders, actually the taxes he pays will be short term with is earned at rate SSI. Walgreens one day soon. Okay. My friend said Walgreens is going to turn into a Bed Bath & Beyond. I don't know why they would do that. Touche. Travis, do you have a Roth IRA? Dave, well, you are getting taxed at your ordinary income rate of over 30% if you trade right. Well, Dave, Howard, if you're being taxed at a 30% rate, you're doing something seriously wrong. Okay? Now, I can't really tell you what to do when it comes to taxes. Only thing I can do is steer you into a direction and tell you to talk to a tax strategist or a tax planner. Okay? If you are paying taxes at all, you are doing something wrong. Okay? It is your legal right to pay little to no taxes as legally possible. All right. That being said, let's get off that topic and let's go back onto Walgreens. Okay, so Walgreens is at a low. Last 30 days, here we go. All right, so 30 days ago, we're at 1180. Now we jumped up to, what is that right there? 1229 is the high of the 30-day period. Okay, today she dropped nicely. So why did it drop? That's an interesting question. Drops your right, well, I'm getting taxed, blah, blah, blah. Those are the rules, though. How do you shelter your taxes? Do you want an IRS audit? Asking for a friend. Are you referencing lost harvesting at the end of the year? Key. All right, let me see if I can explain it to you relatively quickly. Okay? There is no rule, law, or precedence saying that you have to have your trading account in your own personal name. If it is in your own personal name, then yes, you will be subjected to taxes. If, by chance, your trading account is in a limited liability corporation, a trust, or what's the other one? Foundation, which is perfectly legal, you are taxed at that rate. So hypothetically speaking, some states have corporate taxes as low as 10% on the profits. So let's say hypothetically speaking, right, you make 100, 200,000 in profits on your trading account throughout the year. Now let's also say that your corporation or your foundation or your trust has expenses like insurance, overhead, salaries. Let's put it this way. Any losses from the corporation can offset any profits that the corporation is generating through the trading. So if the corporation is losing money on this side, but making money on this side, it balances out at the end of the year, so you're not paying anything. Dave Howard, all my trading is in a Roth. Okay, so if all your trading is in a Roth, you do not pay taxes until, well, actually you pay, that's okay. All the earnings you're making in a Roth are tax-free. I see what you're getting at. Didn't know you could open up an account as an LLC. Well, look at it this way. Okay? An LLC or corporation, a C corporation, an S corporation, a foundation, or even a nonprofit organization can have what is called a pension fund for the employees. Okay, so I'm the CEO, my son is the vice president, my other son is the CFO, my daughter is the another, board member. Okay, they all have access to the, I just said it, pension fund. Okay, so pension fund has to be available to all the employees, which as a family trust, okay, and a family foundation, everyone in the family gets to have access to it. And well, look at it this way. When I'm gone, who's getting it anyway? The kids are getting it. So if it's in the family trust, the family foundation, or the family entity, okay, it is not taxed in the same way. Okay, so profits on one side can offset losses on the other side. Now, if all the board members require a new car every year, fine, they get it. If all the board members agree to have the quarterly board member meetings, let's say Tahiti this year, Hawaii the year after, Paris the year after, South America the year after, that's all business expenses. So if you're really worried about taxes, talk to a tax strategist, a tax planner. Okay? So, yes, you will have to do a little bit of juggling, a little bit of paperwork, but it all depends on how much you want to give to the IRS. If you want to give them money, hey, that's your thing. If I don't want to give them money, well, then I am legally trying every way, every avenue, every way, I'm going to look under every single rock to get no money to the IRS whatsoever, legally. And it's perfectly legal. And if the trading account is set up in a certain way, then you don't have to pay taxes on it. But you have to talk to a tax strategist or a tax planner or a business planner to help you not pay taxes legally. Let's get off that subject and keep on moving. So anyway, Walgreens had this big drop. Okay, but look at the blue line behind it. I want to look at that number. Okay, so the average shares that trade on Walgreens on a daily basis is about 9.5 million. Today, there was 46 million shares traded. Okay, average is 9 million. Today was 46. Now, are those buyers or are those sellers? Who's jumping ship and who's piling on more? Somebody knows something somewhere. Andrea, yes. All entities. Travis, I have no idea what all entities means. But okay, let's keep on moving. So that's Walgreens. I would like to know what went on today. Why did it drop? There has to be a reason. Now, I'm sure one of you guys in the audience probably knows or probably looked up under the news to find out why did it drop. Personally, I don't know. I really don't care at this moment in time. And the reason why I say that, because I don't think Walgreens is going anywhere. Now, I heard of a couple of companies that did go bankrupt. Well, they did not have 8,700 stores. Can you let me know the reason why Walgreens dropped when you find out? As soon as someone lets me know what it is, because I really don't want to do the research. Be 100% honest with you. I really don't want to do the research. Okay? I like Walgreens. The numbers work for me. I got close to 1% in this account. I got over 1% in another account for the week. I got no problem with it. Would you recommend buying the dip? Well, Travis, that is the dip. Okay? And I don't make recommendations. But I would wait for tomorrow to see what happens. Is it going to go up or go down? I wouldn't apply being too big to fail to Walgreens. Their financials are awful. Well, Walgreens lowered its EP, earnings per share value today. Alrighty, well, what did they lower it to? Alright, the dividend yield is 9.6. That's good. Trailing annual dividend yield 14. Payout ratio 290%. Shorted shares only 59 million. Short float 10%. Revenue is 145 billion. Revenue per share, $168 revenue per share. That's freaking huge. Return on assets 1.3. Profit margin -4. Enterprise value, blah blah blah. Enterprise value. PE ratio forward from 6 to 5 to 6 to 5 to 4. Trailing PE is not fully there. Enterprise value 57, 49, 51, 46, 40. That was a big drop. Market cap, ooh, that's not good. 2023, the market cap was 21, then dropped to 17, then to 18, to 13, now to 9. That's a big freaking drop. News. Stop wasting your FA benefits, blah, blah, blah. 5, beaten down stocks, blah, blah, blah. Pfizer joining. Why Walgreens took a plunge today? Alright, well, let's take a look at it. The reason for the drop today appears to be twofold. One, Pfizer unveiled its own direct-to-customer telehealth and e-commerce platform. And Eli Lilly announced it will be cutting prices for GL1 drug Zebound by 50%. Okay. Pfizer and Lilly drugs direct to you. Well, that's a big one. Rival drug. Eli Lilly launched a similar platform in January. That changes things quite a bit. Same day telehealth appointments or linking with local providers in the community. Yeah, they're moving online. All right. Yep, I just read that. High, short, float, blah, 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 mid cap, blah, blah, blah. All right. Did we look at Kohl's? Kohl's is on the list. Julie, we're going to take a look at Kohl's in a little bit. Walgreens could get a short squeeze soon with that 10% short float. One liner for tonight. That's freaking hug. All right. Walgreens is slowly going away. They had a good run. Walgreens is my grandmother's store. They are both dying. Well, that's lovely, Dave. Pharmaceutical companies are undercutting pharmacies and going direct. Yep, I saw that also. Best way to get to 100K invested. 26 and rich. Well, good for you. Jerry Beard. Dave, should I sell my Walgreens tomorrow before it goes to zero? Simone, I got a lot of WBA last week. Zim. All right, Heath Martin. We'll take a look at Zim in a little bit. All right, so you guys done picking on Walgreens. We'll find out what happens in the next couple of days. Now, I'm not monogamous to anything. Seriously. So if the stock goes in the wrong direction and I'm still at a profit, well, then I'll get out my profit. All right, I'm in it at 12. Okay, I got a nice premium this week in all my accounts, so I'm not really worried about Simone. Me too. I'm very scared. All right, well, let's keep taking a look at it. What am I looking at? What? Okay, next on the list. Kohl's. Not sure. I don't give financial advice. Well, neither do I. Does your EX dividend calendar auto-populate, or do you manually enter the info? Messmaker Acres. Hall family. No, it self-populates. Okay, the calendar that I use is in Thinkorswim. Thinkorswim's a trading platform through Charles Schwab. PL Planet Labs, never heard of them. Larry, good evening, James. You look extra rich tonight. Well, thank you. What was I thinking when I got into WBA? Well, the nice premiums. It has 8,700 stores. That's over 100 years old. Maybe that. Well, let's see what happens. All right. So that being said, let's move forward with Kohl's. FL earnings tomorrow. FL Foot Locker. FL. We'll take a look at Foot Locker in a little bit, CG, okay? So let's progress forward as we're moving forward. We got our high, we got our low, where it was a year ago and where it is now, okay? Kohl's high, low, where it was, where it is, what direction is it going? The numbers right here, 1959. The 1950s are going for $1.50 on a $19 stock. $1.50. That's over 6%. Simone, I think I warned you. Sorry, buddy. Hold on. Walgreens is finishing its merge with Alliance Boots. Okay. I've been stuck with Kohl's for months at 26. All right, Julie. 26. I'm into Kohl's at 23. Okay, 23 is right here. 26 is here. Now, have you been selling covered calls against it? I sold this week how long did I sell this week? I can't even read that damn thing. All right, so here's my Kohl's here. I sold 20 contracts at 110. That's crazy. 48. The $20 strike price. All right. Right here. Okay. Let's go through the whole thing so we actually see what we're looking at. All right. A year ago, we were at 24.71. We bottomed out at 17.73. That was back in the beginning of October of last year. The top of the year was the April 1st, 29.63. All right, so for the last few months, okay, a slow descent. Right now, we're at 19.60. Okay, on Monday, I sold the $20 call strike, and I got $1.10 per share. Now, $1.10 per share on a $20 stock, that is close. That's over 5%, close to 6%. So, Julie, I don't know what call strike you sold this week. If you were at 20, wait a minute, you're at 20, I thought you were at 26. After months of calls, my cost base is down to 23 something. Okay, Simone, we can cry together. That's funny. So, might be your grandmother's store, but will be like Sephora with a merger, hopefully. All right, please take a look at PL, Planet Labs. They are an interesting company. Okay. Jerry, I've been in Kohl's since May, still collecting premiums. Paul, high premium 5%, how I got stuck with 26. Okay, you're not really stuck, kiddo. Okay, now, like I said, I'm in at 23. I sold the 20s. Well, right now the 20s are going for 80 cents a share. Look where the stock is. It's dropping, or it's around the $20 area. Where are we? Okay, here's the last 30 days. 30 days ago, 20.50, jumps up to 22.50, drops down to 18.50, up, down. Now she's going up. Today is a down day, 19.60. I sold the 20s, got $1.10. $1.10 is about 6% return for Kohl's this week. Okay, Darwinly, DJT, it's not on the list. I collected a 1% this week on Kohl's. Hey, Hollywood, what's happening? All right, so that being said, I have no problem with Kohl's whatsoever. Julie, tomorrow is earnings call, hoping for a jump. I did get a good premium for this week. All right, so Julie, I don't know how to make you feel better about the situation. I really don't. But for the most part, people buy a stock and plan to hold it for years, sometimes decades. And what do stocks do? They go up, they go down. They go up, they go down. Jerry, I don't shop at Kohl's because it gets on my nerves that they keep asking you to get their credit card. Not sure how selling calls goes, but if it goes over 20, you're forced to give those shares, correct? How much money would it take starting out investing using your method? Okay, John Boy, you can start out. My grandson started out with $50. Granted, he's 4 years old, and me and his father take care of it for him, but you can start with anything. So Jack, no, I don't have to give those shares up. So what's going to happen at this moment in time is at 1960. Now, whoever bought that from me paid $1.10. So their break-even price is $21.10, which is up here. Okay, so whoever bought my contracts, they paid $1.10 a share. So for them to be profitable, the stock has to go up over 21. Okay? That's just to break even. And then they're going to want to profit. So then they're probably looking at 22 or 23 before they decide to actually take my shares away from me. Now, I always have the opportunity to roll forward into next week with my shares, which I might do depending on what she does tomorrow. Okay, so I look at the stock twice a day. It used to be just once a day, just in the mornings. Just in the mornings. But now, with you guys here, I look at it twice a day. Once in the morning, once at night. I have a good grasp of where it's going. Now, it's here at this moment in time. Great, well, what's going to happen tomorrow? Well, tomorrow's Wednesday. It's halfway through the week. How much money will it take? We already did that one. Jerry, so you are the reason I can't sell my Kohl's then. Yes. MPW, Hollywood. We'll take a look at MPW. MPW. Julie, if they didn't harass me about getting the credit card, I would shop there. I hear you. All right. So that's Kohl's. Let's move on to the next one. Please, PL, please. Really? I can tell you right now, PL. All right, let's take a look at PL. What the hell? No! All right, that stopped working. PL, Planet Labs. That's going to be a no. All right, I'm taking a look at David. You ready? PL. No. There you go. No. PL is a monthly optionable stock, and it is a no. I don't do monthly optionable stocks. Well, now that's just freaking weird. There it goes. Now it's working. All right. Dave Howard, no monthly dividends. UFC. UFC is going to be the same thing. UFC. Yeah. No. Sorry, dude. Darbenley, UFC is going to be a no. Sorry. It's just not pulling up. Next on the list, don't ask me why, but somebody wants to take a look at NVIDIA. NVDA. Okay, NVIDIA, there's our high over here, 140. Got the profit taking right there, back up to 128, the 127.70s, the 128 going for 850. Holy shit. Okay, great premiums, but I don't like the company. The reason why I don't like the company, the dividend that they pay is 1 penny per share. 1 penny per share. So I'm investing $128 to make 4 cents a year in dividends? No, thank you. And then, even worse, at $128, the book value for this company is $2 a share. So explain to me why that is a good buy. The premiums are all freaking outrageous. Okay? The dividends, absolutely abysmal. Okay? 1 penny per share? No, thank you. Book value, $2 per share? That's a long freaking drop. From 128 all the way down to 2, yeah, no thank you. So that's going to be a no for NVIDIA. For me, anyway. JWN. Nordstrom's. Okay, so somebody want to take a look at Nordstrom's? Here we go. The high, the low, where was it? Where is it? What direction is it going? The 22.98, looking at the 23. The 23s are going for 53 cents a share. 53 cents a share on a 20-something dollar stock? I mean, that's nice. Think about it. 53 cents a share on a $23 stock. That's 2%. If you like Nordstrom's. It's very difficult for some people to accept that fact. Okay, do I like Nordstrom's? Great. Do I mind owning it for the long term? I don't mind it. I like Nordstrom's. I gotta write that one down. I'm a little unhappy with my Robinhood because I have like 800 shares of a certain company and they're only allowing me to sell 5 contracts. I should be able to sell 8. I have 800 shares. All right. Jeff, Nordic American Tanker, NAT. I can tell you no right now if you want. No. The reason why it's going to be a no, it's a monthly optional stock. If you're not familiar with monthly optional stocks, well, you can only do it once a month. Once a month is only 12 times a year. Now ask yourself a question. If I'm going to collect a premium on a company, okay, would I prefer to get 12 of them or would I prefer to get 52? Charlo, if you pay less than the value is a stock that gives you good premiums for options, does not very risky. Charlo, I'm not 100% what you mean by that. Not 100% sure. You're probably thinking of NVDA because NVIDIA is paying huge premiums. Okay, 127 to 128 are going for $8. Okay, that's like over 6% for the week. But then you're owning a company that has a $2 book value. The stocks are only worth $2 a share. Okay? And the dividend's only worth 1 penny a share. So there's more to the equation than just the premiums. I mean, yeah, the premiums are fat. They're nice. But the dividends are crappy and the book value is horrible. Charlotte, Aaron, JWN, look at 830 premiums. 2%. Yep, GD, we already did that. Okay. JWN. JWN. Okay, last 30 days. Here's our high right here, 2405. That was in mid-July. Last 30 days. 30-day high was on the 1st of August. Okay, 2 days later, here's our 30-day bottom. Shoots up, pulls back. Look at this gap. Okay, gap filled. Now she's coming to the downside. Well, great. Okay, if I bought it tomorrow morning at $22.98, yuck. Ooh, no, there's a good thing. Remember we pointed this out a while ago? Some of you guys might remember this. Talking about it. This guy has no idea. Perry just joined. What you recommend on investing on? Okay, Aaron, I don't recommend anything. Bitcoin to the moon. Woohoo! Somebody needs to get rid of him. Let's go. Look at Honeywell. Ooh, I like Honeywell. HON. We'll take a look at that in a minute. Right now we're looking at Nordstrom's. Now, the last trade, 21.14. Right? The bid, 22.77. The ask, 22.98. Well, there gives you a clue right there. The market maker is going to push it up tomorrow. JWN will open up nicely tomorrow. You're right. I believe their earnings were favorable. JWN went up 7% after earnings today. Okay. Not necessarily so. JWN did not go up at all. JWN went down. But look at the amount of volume. It gapped down, and there's a huge amount of volume to go with it, too. I'm kind of interested to see what happens with Nordstrom's tomorrow morning. I got it written down, and I got it circled. Tally Chemi. Is that right? I don't know if I said that right. Tally Chemi. Oh, God, that's horrible. Gets rid of the cough, anyway. What app do you use for this? Hey, this is not an app. This is actually a trading platform called Thinkorswim, and it is through Charles Schwab. Is reading candlesticks charts an accurate way of determining an opportunity? I'm not 100% sure. I'm going to try a Vegemite Sani. Alrighty then. Alright. So that's JWN. I like it. I'm going to take a look at it tomorrow. Dell is next on the list. Let's take a gander at Dell. Now, Dell a year ago was in 53. That's the bottom. Okay, 9 months later, she's at 179. Can you imagine it going from 53 to 179 in less than a year? You nay, boys. I have no idea what that means. Which heap stocks do you recommend for everyday gaining? Wow. Hey, Austin, what's happening? I can't even read that name. Isidro? Is that right? Isidro? I don't make any recommendations whatsoever. And what you're talking about, I'm totally clueless. Okay? Jason, don't you have to have 20 grand in your account to day trade on Schwab? That's what I use. You need 25,000 to do day trading. Yes, I said it right. Cool beans. Isidro. All right. Okay, here we are right here. There's the high, there's the low, this is where it was, this is where it is, a little jump up right there, 1186. Now, I jumped into Dell this morning, 25,000 FDL. Curtis, what is FDL? FDL. Now, Curtis, just to let you know, anytime I say, what the hell is that, it's usually going to be a no. FDL. Yep, it's a no. Imagine that. Do you use any ratios to determine buys? Not at all. Okay, DK, we already looked at Walgreens. Neil, F-E-L. What the heck is F-E-L? Usually if I say what the heck is that, it usually means no. Okay, so F-E-L is a no also. Let's get back to the list. All right. Dell. We're looking at Dell. D-E-L-L. Meta. All right, Saturn. Meta is going to be a no because I know Meta does not have 20 years of increased dividends. Halliburton. We'll take a look at Halliburton. You guys going to stop with the question so I can do these. IVR is going to be a no. I can tell that right now. ALT. Austin. What the heck is ALT? I know it is. ALT. Altimiller. What? ALT. Well, let's take a quick look at ALT. Satisfy this young fellow right here. Oh, look at that. There are no dividends in the selected time period. That's going to be a no, dude. Sorry, ALT, no. Meta, no. Hal, H-A-L, Halliburton. Do you use Time XO Inheritance? No, I do not. Imagine that. Let's get back to Dell. Okay. Dell, last 30 days for Dell. Here we go. 30 days ago today, Dell's at 114. Topped out at 116, drops down to 86, shoots up here to this little channel between 109 and 111. It just goes sideways for the last 2 weeks. Well, I jumped into Dell this morning at 111. What did I do with Dell? A few trades. Dell. Now here's Dell right here. All right, 500 shares at 112. I sold the 111s. I got $7.50 a share. $7.50 a share. That means my break even is going to be somewhere around 104, 105. BBA, yeah, no. We're going to say no to Alibaba. They don't have 20 years of dividends. Pindu, never heard of them. IVR, Sal, come on. What's IVR? All right, so currently Dell is at, like I said, 111.86. The 111s are going for $7.50. That is a nice premium. So you only use charts, no fundamental analysis. All right, Visionary. Visionary Vantage. Let's get back to his question. Wow, I missed all these questions. All right, so Visionary Vantage says, so you only use charts, no fundamental analysis. Well, no, you're wrong. Okay, I use fundamental analysis after I find out when a company, okay, now I use only companies that have 20 years of increased dividends. So point blank, they got to have 20 years of increased dividends. There's over 300 companies. Actually, there's 9,596 companies we checked yesterday. That's close to 9,600 companies every single day trading. Every single day, 9,600. So how do I decide? I decide by how often do they increase their dividends. Now, a dividend is a portion of the profits that are paid to the shareholders. Okay? If the portion of the profit to the shareholders increases every single year, well, logic, common sense tells me that they're consistently profitable. Because if they're not profitable, they're not going to increase their dividends. That's a shortcut. I don't have to read all the what do you call it? I don't have to read the earnings reports. I don't have to read any of that. Okay? If they continuously increase their dividends, that means they're continuously profitable. It's just common sense. All right. Going to all these questions. Wow, I missed all these questions. IVR was a no. Okay. So after I find companies, there's about 300 of them that consistently increase their dividends every single year for more than 20 consecutive years. 20 consecutive years. That goes all the way down to 2004, 2004, 2005, 2006, all the way up to current times. 20 years or more of increased dividends. Well, that's number one. Number two, they got to have weekly options. Well, that's not really a fundamental, but then here's the thing. Once I figure out what companies I like, and there's only about 300 of them that I like, I put them into the calendar. The calendar tells me when to look at them because stocks move up before the dividend is paid. So if I'm looking at 3M, I don't want to buy it, the week of the dividend. I want to buy it 2 weeks before. I want to give it a little bit of a chance for it to go up in value. So it goes up in value. I collect my 1%. I say, thank you very much, 3M. I'll see you again in 90 days. Because 3M pays a dividend every 90 days. UPS pays a dividend every 90 days. Apple, every 90 days. Citigroup, every 90 days. So if I buy Citigroup, I get my 1%. If I buy Apple, I get my 1%. If I buy UPS, I get my 1%. If I buy 3M, I get my 1%. So instead of getting 1% for the month, now I just got 4% for the month. It boggles my mind why adults make it more complicated than it needs to be. It was created for a 9-year-old. My 9-year-old daughter wanted to learn how to trade. It had to be simple. She was 9 years. You guys just don't get it. And it boggles my mind why adults don't freaking get it.
Hi, I'm JC, and I'm a 10-minute trader. In less than 3 minutes, I'm going to teach you how to make
Way
more than the average
to
trader.
go.
There are 5 keys. Key number 1, there are 156 companies.
Uh-oh, no volume.
Over 10%.
What's going on?
There are 250 trading days.
Why is there no freaking volume?
In a year. That's point number 2. And point number 3, you don't need to own stock for a whole year. That's just silly.
Oh, well, no volume.
Point number 5, rinse and repeat.
Let's see if another one has volume.
Hi, I'm JC, and you being part of my internet website club thingy, which my
Yep,
dad didn't
there's
let
the
me
little
go on
princess
that,
right there.
but I
Alright,
did.
so anyway, I'll have to
Being
figure out
part
why
of
it
that,
doesn't have any
you're
volume.
getting
I'll figure that out tomorrow.
weekly lists
Not today.
of stocks that I'll be trading. And
Let's get back to where we were. Alright, so as I was saying, in 2008, when my 9-year-old daughter wanted to learn how to trade, it had to be simple, safe, predictable, consistent, no way that she could lose. Five criteria. That should be the same for everybody. Okay, if you don't understand, if you don't want to spend hours upon hours on it, well, just do the simple stuff. Simple, safe, predictable, consistent, and no way to lose. 5 rules. Never buy something you do not understand. Never sell at a loss. Make sure the company is continuously profitable. I prefer 20 years of increased dividends because it makes them sure they're over 20 years old and make sure they're consistently profitable. 4, make sure it has weekly options. I want a weekly cash flow. I do not want monthlies because monthlies just don't pay the same. All right. And then 5th rule number 5, make sure the numbers work. What do I mean by make sure the numbers work? Well, pretty simple. When I say make sure the numbers work, what am I buying it for? What's the closest strike price? What can I sell that for? What am I walking away with? All right? So if I'm buying it at 111, I'm selling the 111s, and I'm collecting $7.50. Well, that's over 6%. That's freaking crazy. And that's on a weekly basis. And look at the premiums. At the money, $7. 2 strikes out of the money, $6.50. 3 strikes out of the money, $6.10. 4 strikes out of the money, $5.70. 6 strikes out of the money, $3.50. It's just crazy. Why would you not? Never mind. It's just Meta's a no. Halliburton is on the list. CO. What the heck is CO? Now, you guys got to be leery. When I say what the heck is this or what the heck is that, well, it means it's usually going to be a no. All right, so CO. CO has no options. Okay, Go-Kart, sorry about that. Sell, IVR. It's a REIT. Why am I looking at IVR as a real estate investment trust? IVR, let's see how well IVR actually has on the dividends. Oh, look at that. Nice. All right, so all the way back to 2009. Not quite 20 years, but okay. $6.10. $10.50. Okay, then dropped again, went back up. 10, 970, 10, 970, 8, 650. Wait a minute, went from $10 to 650. Now it's at 650, 2011, 650, 650. Dropped again to 5. It dropped again to 450. It dropped again to 4. It dropped going to 420, 450, 50 cents, 20 cents. Oh, fuck no. What the hell are you thinking, Sal? Seriously, did you even look at these numbers? 10, 20 years ago, they're paying $4 a share. 2011, paying 650. 2009, they're paying 7 and 10 and 9. And now where are they? Now they're at 40 cents a share, and you think that's good? I'm glad you don't take care of. I ain't taking any advice from you, dude. So you only use charts on yes, I use fundamental analysis, and you weren't paying attention earlier. Alibaba. Okay, so you want to take a look at Alibaba, even though I said no. BABA. Here we go. Alibaba. They've paid 2 dividends. 2. What's his name? Sandesh. Alibaba has paid 2 dividends and only 2 dividends. Why would I want to look at a company that hasn't been consistently profitable or decide not to share their profits? Great, look at the first one, $1 a share. The second one's $1.66. If they keep that up, that's freaking awesome. That's over a 50% increase from 2023 to 2024. That's a 66% increase in 1 year. That's awesome. But they've only got 2 years. Sorry. PayPal's a no, they don't share their dividends. They don't share profits. How do you set up an option? How do you set up, okay, well, Ravens boy. How do you set up an option on earnings? I'm totally lost with that question. Okay, Austin, we already looked at ALT, that's a no. Apple user, AT&T. We already looked at that one. That's a no. The premium is absolutely horrible. Sandesh, Alibaba. We already said no to that one. Erica, IBM. I got that one written down. We'll take a look at it. Keep on going. Combat Bricks. Never heard of it. No idea. Just joining. Is your main thing dividends? Saturn, no. My main thing is a safe, predictable, consistent 1% per week. Drazik. What's happening over there, Drazik? Nice of you to show up. I haven't seen you in a couple of days. All right, Jen, Johnson & Johnson. All right, Darren B, what Windows? I have no idea what Windows means. Okay. I don't even think there's a Windows. There is no company called Windows. Sorry, dude. Jen, J&J, Johnson & Johnson. That's going to be a no only because it's kind of too close to the high, number one. And the dividend, the premiums, 163. Yeah, 182. I'm losing $1. I'm walking away with 89 cents. That's a 0.5%. Hi, Drozo. Okay. Sorry, Jen. Johnson & Johnson only pays 0.5%. If you like Johnson & Johnson, don't get me wrong. 26% a year is not bad. Saturn, no. My main thing, safe. My main thing is simple, safe, predictable, consistent 1% per week. Evan, Costco, really? COST? $900 a share? No, thank you. Okay, 909, the 910s are going for $11 a share. Okay, $11 a share, Evan, if you can afford that. And look where they are. They're actually at the high of the year. Okay, you can make your money in the stock market buying low and selling high, not buying high and waiting for it to get higher. Yeah, I don't play that game. Okay, I like buying low. Look, here's a low here, there's a low here, there's a low here, a low there, 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 a low there. Why would I buy at $900 a share at the top of the game? Okay, Barry, Honeywell is on the list. Okay, I'm going to take a look at Honeywell in a little bit. Oh, Pip wants to take a look at Apple. AAPL. All right, Costco is a good LT hold for me. Oh, Lisa, how are you today? So nice. Pip. TQQQ. Yeah, no, sorry. Yeah, Drazek, we're going to look at Apple in a little bit. Evan Jellyfish. Mahatma, my name's SY. Okay. Alrighty, alrighty. Are you still stuck with that Paramount garbage I told you? Far left Teddy the Grump. Well, far left Teddy the Grump. Paramount. Interesting. Do I even have Paramount? No, I don't have any Paramount. Is your main thing investing in stocks that pay dividends? And if so, do you reinvest or use as income? I reinvest some accounts, and other accounts I actually use it to spend. Is there a holding period minimum to get dividends? Yeah, 1 day. Is there something better than Schwab to trade if you only have $5,000 to play with? Yeah, you can use Robinhood or Acorn or Webull. As long as you hold shares 1 day after the X date, you get the dividend. Cool beans. Yeah, what is typically like a month out? I don't do a month out. I do weekly only. Computer's muted. Is it really? You can't hear what I'm saying? Dum dum dum. Dum 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 dum. The story you're about to see is true. The names have been changed to protect the answer. It seems to be working. All right. CO. Adam. CO. Really? CO. Global Cord Blood Corporation. Yeah, it has no options. That's going to be a no. Computer muted. Adam. Your computer speaker's turned off. No, my computer's not turned off. My computer speakers aren't turned off. So you sell after dividends? No, one shot, I don't. People think taxes first. Hassan Pfeffer, how are you? I haven't heard from you in a couple of days. Bum, ba-dum, bum. Uh-oh. IBM. What about Ether? What the heck is Ether? ETHA. iShares Ethereum Trust ETF. No options. What the hell are you thinking? Alta. Really? ULTA? ULTA? That's going to be another no. Alta Beauty. 321. Waiting for data. ULTA. 1 dividend back in 2012? Hell no. Who came up with ULTA? Alright, ULTA is a no. My TomTom, IBM. IBM's on the list. See all those lows that you pointed out? They're all lower than now. DCA, no crystal ball. TikTok, thank you for that. Watch. CLSK, probably a no. CLSK. Okay, $11. CLSK. CLSK. Oh, come on. What the hell's the matter with you guys? I can hear you on TikTok and YouTube. Alrighty. Hey, from Canada. Verizon. I can hear your voice. I can hear you. Okay, some people can't. Some people can. Tech B's a no. Okay, thanks, 86. Andrea, James, did you say you buy 2 weeks before earning? No. It's not what I said, Andrea. I buy 2 weeks before the dividend date. And stock usually goes down 2 weeks before. No. Do you ever look at valuations like PE ratios and the cap ratio? Hakuna, how are you today? Hakuna, I look at book value. Earnings per share, books value, consistency, and increased dividends. All right, somebody wants to look at Verizon, VZ. IBM's already written down. Ian Outdoors, Tech B. What the heck is Tech B? Never. You know, if I have to say what the heck is it, it's usually going to be a no. TECKB. Yeah. Waiting for data. Usually that means no. I never heard of it. Alright. VZW. What the hell is VZW? Midnight Sport wants to look at Disney. DIS. VZW. What the heck is VZW? Yeah, can't find that one. Verizon Communication Corporate Common Stock EX distribution when issued. Yeah. Well, that's not for normal people. Alright, how about IBM? We're going to look at IBM in a little bit. Ford BC. What? Alright. Jules, my organic planet. Interesting. Patrick, BCEF. BCE. Yeah, no. Coke. I'm assuming you mean Coca-Cola. Yeah, no. 2 reasons why no to Coca-Cola. 1, it's at an all-time high. 2, $71.70 to 72 is going for 37 cents. That's a 0.5%. Nando, no to SPY. Andrea, usually by 2 weeks before the EX date. Alibaba's a no. We already talked about that one. Live National Entertainment. Never heard of it. 925p. Do you have a Bloomy? Or do you use other software? STU. What the heck is STU? That should give you a clue right there. If I say STU, it has no options, that's a no. BCE, we already said no to that one. GOG. Is that Google? Alphabet. Yeah, Google. No. Google does not have, well, Google just started paying dividends. It's going to be a no. IEP. Icon. No. No. The reason why I don't like IEP, let's look at this. IEP. This is the main reason I don't like IEP. Uh-oh. Well, the dividends are all over the place and they don't increase. Check it out. Okay? Those are 125, 150, 150 for a long time, 175, 2. It cuts it in half to $1. Yeah, no thank you. And what makes ICANN worse, IEP, check this out. Are you ready? Holy cow. Is that right? That can't be right. 28.44%? Is that right? That can't be right. They just cut their dividends 50%, and how can they say, all right, well, I guess so. Nice premiums, nice dividends. Okay, IEP. I don't like it because the dividends aren't consistent, and they aren't consistently going up. Whatever, bud. Everyone do your own research. Well, I've already said that. What are you using to check these? What am I using to check these? Well, I'm using the option chain. I'm using the underlying information that they open, the high, the low, the volume. I'm just looking at the numbers. I'm looking at the chart. You get the charts anywhere. Okay, then I gone over to YouTube, Yahoo Finance. Okay, Yahoo Finance What gives me all the information on the company? Okay, here's the chart right here for today. Here's the volume, here's the average volume, the previous close, the open, the high, the low, the bid, the ask, the dividend. It's paying $1 a dividend per quarter. Current price is $14. There's a 1-year target of 25. Well, historical data dividends only. If we go all the way back to as far back as they go with dividends, it goes all the way back to 1988. 1988, it was 49 cents a share. Okay, they didn't increase until 1991, so that's 3 years, no increase. And then in 92, they went to 24 cents. And then in 93, they cut the dividend in half, and then they dropped it another 20%, and it stayed at 10 cents for 2 years, and went to 15, then to 24, and it stayed at 24 from 08 to 2011, another 4 years, then it jumped to 49, then it dropped to 10 cents a share, then it went from 10 cents a share in 2012, and it jumped to $1 a share in 2013. And $1.25, $1.50, and it stayed $1.50 in 2014, all the way to 2017. That's 3 years, and 175. Then $2 a share from 2019 until 2023. That's 4 years, and then they cut it in half. Okay, if you like, I can. Whatever, bud. Yep. I always tell people to do their own research. TMC. Too much Charlie. TMC. Yeah, TMC's a no. Coke bottling. Sweet. Okay. Coke. Can't find that symbol. You got to give me a sticker symbol. I can't do it that way. CMG wants to look at Ford. Ford. All right, here's your high of the year right here, 14. Down here at 9.50. Nice run up to where we are currently at $11.14. The 11.12. The 11's going for 28. That's nice. The 11.50s are going for 8 cents. Not quite there. The 11s could do it if you like Ford. Now, Ford's another one of those companies over 100 years old. Now, Ford was having issues a few decades ago. Their stock dropped all the way down to $3. Was it $2.50, I think. It was really low, but they recovered. All right. Here's the blue line, represents this year. This is where we are now. Ford hypothetically should go sideways for about a couple of weeks and then drop and then shoot up for the end of the year. Hypothetically speaking, because that's based on historical performance. Okay? Based on historical performance over the last 10 years. That's 10 years worth of data, that red line. The blue line's just this year. Okay, we already looked at IEP. Pan W, Camus Crush. Are you guys just throwing everything out there? What time is it? It's 1:15. Alright, we already looked at Ford. IEP's a no. Pan W, I never heard of them. Okay, PANW, Palo Alto. PANW. Alright, PANW is going to be a no. There's no dividends at all. Okay, Rivian, it's going to be another no. Rivian, RIVN. Okay, Rivian has no dividends. Disney, alright, someone wants to take a look at Disney. DIS. Alright, here's our high of the year. Here's our bottom. Here we are at 90. $90.80. The 91s are going for $1. $1.21. That's well over 1%. So let's take a closer look at Disney. A year ago, we're at 84.12. Got a double bottom at 79.82. Got a triple top at 123.65, and that was the end of March. So since the end of March, as you can see, it just drops, finds the bottom right here at 84, bounces off. Now we're sitting at 91. All right, so the 91 is going for $1.21. That's over 1%. That's what we're looking for. The question you need to ask yourself is, do I like Disney? And do I like Disney at $91? That's a question you need to ask yourself. Now, most people buy a stock and hold on to it for a long period of time. But I tell you what, if I buy Disney at 91, I sell somebody the rights to buy it from me at 91, basically the same price I paid for it, and I get to collect this premium, $1.21. Now, $1.21 is not a lot of money. That's $1.21 per share. So if I get 1,000 shares, well, I'm making $1,200, and I'm buying it at 91, and then I'm selling it at 91. But still, I collect that premium, and that premium's over 1%. Well, 1% every single week is over 50% per year. That's what I'm looking for. Simple, safe, predictable, consistent, 1% per week. So, what is your criteria when it comes to earnings per share? Do you demand increasing earnings per share each year over a long period? Hakuna, you've been here long enough. Okay, earnings per share. That means earnings per share is going to be higher and higher because they take a certain portion of all the profits and hand them back to the investors. The very first dividend stock that was ever sold, okay, was a promise to the investors. We will share the profits with you. That's where the dividends came from in 1602. The Dutch East India Shipping Company went door to door to the regular people. Regular people, the peasants, were not allowed to buy shares of stock or own parts of companies. But back then, they went door to door, knocked on the door and said, hey, have I got a deal for you? You give us some of your money, we will give you some of the profits of this company. Basically, that's where it came from. Of course, a little more complicated than that, but simplified, yeah. Ribbon's a no. Disney looks good. TMC was a no. BNS. Patrick, really? BNS? What the heck is BNS? Now, if I have to say, what the heck is this? It's usually going to be a no. And it is. Imagine that. IEP a nightmare. Andrea, what would you suggest? And I had it at 50, at 13, Ford, we looked at Ford. Oh, look at this. Nando wants to look at Microsoft. MSFT. Now, Microsoft is a decent company, and they consistently increase their dividends. A little pricey for me. I remember when Microsoft was below 100. Well, now it's at 400. Lockheed Martin, LMT. LMT. Lockheed Martin. Oh, God, that's horrible. Oh. That is a horrible drink. Do you do LSARB or just weekly option rolls? All right, you're going to need to tell me what LSARB means. All right, because, you know, I have done many different industries when I was growing up. You know, I worked on a farm. I worked in a lumberyard. I worked in a lumberyard. I worked in restaurants. I worked in manufacturing companies. I've worked in manufacturing companies. I've worked on presses. I've done a lot of shit. LSARB, I have no idea what that means. Lockheed Martin's on the list. And you have a broken TV. Yep, I'm aware of that. I got a new one in the car. It's just a little late. I couldn't get around to changing it, but tomorrow I will change it out. SQ. Dude, what the heck is SQ? Block Inc. What the heck is Block Inc? I've never heard of them. SQ. Alright, apparently you guys aren't listening. When I say dividend investing for weekly cash flow, it's right there in the corner. Dividend investing for weekly cash flow. There are no dividends in a selected time period. That means no dividends, no thank you. Wait, RVM. What the heck is RVM? And if I have to say what the heck is that, RVM, yeah, no options, no thank you. Oh, where the hell do you guys get, Wildcat Sam, how you doing? I don't know where the hell you guys get your information from, where you buy your stuff. You're buying stuff that makes absolutely no sense to me whatsoever. It's his camera. I have no idea what that means. What do we think about NVIDIA? I already gave my opinion on NVIDIA. And don't get me wrong, I know nothing at all about NVIDIA, the company. But what I do know, Hakuna, hold on a second. Yes, I know you said that about dividend, and you want to increase dividends, but there is still the possibility that you are 1 year can have a low earnings per share, but still increasing dividends. That's why I asked. Yeah, you can have 1 or 2 years of lower earnings per share, but if they're consistently increasing the dividends, that works for me. When you're doing it for 20 consecutive years, well, it kind of overshadows that. Now, the reason why I don't like, Luke, the reason why I don't like NVIDIA, it's $128 for the stock. The dividend is 1 penny. So I'm paying $128 for a 1 penny dividend? Well, what kind of profits are they having if they're only giving 1 penny to their shareholders? Worse than that, the book value for NVIDIA is $2 a share. That means if the judge says, all right, you guys need to liquidate and pay off all your creditors and all your investors, you're getting $2 a share, buddy. You're paying $128 a share to buy the stock that's only worth $2 a share. How about PBR? Did we look at that one? I hear you, but I'm not following the math. All right, keeping it real. You're not following the math. All right, let's see if I can get the math down for you. Take a look at Macy's for a second. Macy's at $15.36. I like Macy's. I have a lot of Macy's. I bought it. I sold it. I bought it. I sold it. I bought it. I don't hold anything. Longest I've ever held anything this year was 4 months. That's it, 4 months. All right, $15.43. The 1550s are going for 30 cents a share. That's almost 2% per share. How do I figure out the math? Well, for that, we're going to bring up our calculator. Now, the current stock price. You can't really argue with the numbers. You may not like me, you may not agree with me. But if the number says 1543 and this screen here, this screen here is live on YouTube, so you can sit in front of your big screen TV or on your computer. Don't have to look at me at all, but the big screen, and you'll be able to see the numbers. The numbers don't lie. Purchase price $15.43. The closest strike price to $15.43 is going to be the $15.50. Okay? Now, the $15.50 is currently selling for 30 cents a share. All right, so let's change this right here to a covered stock. Now, a covered call is one of the safest trading strategies there is. You buy a stock and you sell a covered call against it. You continuously own the stock until it hits your target price. Now, the target price that I'm talking about at this moment in time is $15.50. The $15.50 is going for, right here, $15.13. So we'll click on that one right there. All right, and it automatically fills right there. Now, for those of you who are a little bit queasy about the numbers, I will go from 1,000 shares and I'll only go to 100. So let's just buy 100 shares. Okay, 100 shares of Macy's. I'm going to buy at the market order, so as soon as it opens up in the morning, it will fill. All right, here's the trade right here. Now I'm going to read it to you and see if you understand the math. All right. Buy one covered call of Macy's 100s. Those are the weeklies. 6 September 24. That is this coming, not this Friday, but next Friday. Okay? Because there's not enough time between now and this Friday. The $15.50 call strike on Macy's. My break even is $15.08. That means if the stock is above $15.08, I'm going to be in a profit. Anything over $15.08 is going to be a profit. The maximum profit for this trade is $42. Okay, now that's not a lot of money, but let's do the math so you can understand it. Okay, so the maximum profit is $42. Now, to do this trade, it's going to cost me $1,508. Not a whole hell of a lot, $1,500. $1,508. Okay, that's going to equal 2.78%. 2.78%. That's just a little bit under 3% for the week. And the stock has to stay above 1550. Well, currently it's at 1543. It's Macy's. They've been around for over 100 years. If you like Macy's, I like Macy's. Okay? So if I do this particular trade, it is 2.7%, which is close to 3% for the week. Let's get out of there. I'm not quite sure if you understood that math, but I went through it as slow as I could. I don't want to do that. That's back to normal. That's back to normal. All right, now PBR we looked at. What happened to WBA 10% dividend? Yep, Robert. What about Rolls-Royce stocks? Yeah, sorry. How about FANG? FANG's going to be a no. Give me that PBR. We already looked at that. Waste Management Lead. WM. Haven't looked at that one in a while. I like Waste Management. AbbVie. Ooh, another good one. A, B, B, V. You guys do realize the more questions you ask me to take a look at, the less I'm actually going to be able to do. It's 11 o'clock and I haven't looked at much. Peloton's going to be a no. They don't have 20 years of increased dividends. JW1, we already looked at it, Travis. It looked good. Thinking of exiting Peloton. What you think? Oh my God. Why the hell would you buy it in the first place? Peloton. $4.78. $4.78. The 450 is going. That can't be right. Whoa! Check that out. Yeah. I don't know what to tell you about Peloton. Okay, they don't have dividends. By the way, James, I work for Northrop Grumman. If you care, how expensive stock. Northrop Grumman. Okay. Oh, Andrea, I didn't know you worked at Northrop Grumman. Good for you. All right, so JDP, I'm not sure what to tell you about Peloton. As far as I know, let's find out. To be exact, okay, see, Peloton doesn't have any dividends at all, so it doesn't fit into this trade. All right, so Northrop Grumman, Andrea, it's going to be a no, and the reason it's going to be a no this week is look where it is. It's at the high of the year. All right, high of the year, 512 is going for 516. The 515 is going for $1.75. Oh hell no, that's horrible. Sorry, Andrea. Darbenly, do you use to say trade futures forex? No, I don't trade futures and I don't trade forex. I used to. Decades ago. I don't anymore. I didn't like sitting in front of the computer all day. What happens when there's nothing to buy? Oh my God, there's 9,598 companies to buy. That's just the companies. We're not talking about We're not talking about Forex. We're not talking about futures. We're not talking about commodities. We're not talking about crypto. There's a shit ton of ways of investing your money. There's always something to buy. Opinion on Philip Morris. PM. Philip Morris. Don't get me wrong. You know, I don't smoke. I don't condone smoking. Okay? But Philip Morris has been around for quite a while. All right? They're at the high of the year. 122.77. The 123 is going for 45 cents. The numbers just don't work for me. JDP, we just looked at it. How about FANG? FANG's a no. Why? Nike. NKE. Nike. Last 30 days for Nike. Nike's going to be a no. Don't get me wrong. It's going to be a no for this week. But we're going to look at Nike again in 2 weeks. Why? Because right now it's at a 30-day high. I'm going to wait for the profit taking, and she's going to drop back down to here in about 2 weeks. So I already have it written down. What happens when there's nothing by? We already took a look at that one. PBR, we looked at that one. What could be a reason there's no dividends? Ooh, is that a real question? ITSVO. It's VOO. Okay, why is it no? There's two different kind of companies. Actually, there's three different kind of companies. There's private companies with we can't do anything about. Then there's only two left after that. Public companies. One takes all their profits, invests it back into the company for capital growth. Okay, if you're looking for capital growth, you're definitely in the wrong place. I do not do that. Okay? Now, other company takes all their profits and they pay the dividends to the shareholders. They share the profits with the dividends. So if there's no dividends, that means the company doesn't share their profits. Darbin Lee, Primerica. Ooh, I remember them. PRIM. Primerica. PRI. I don't think I've ever traded PRI. That's why. It's a monthly monthly options. Okay, they don't pay the same. Okay, when I say they don't pay the same, you can take a look at the numbers all you want. 260. If we open this up right here and look at the 260, it's going for 5 cents a share. What are you shitting me? Really? XRP, no. You loving PayPal now? No. PayPal doesn't have dividends either. What time do you go to sleep? Around 1. CMG, he has a list of 300 stocks to choose from. Yep. Is DVN and DVN at 41. Okay, Devon Energy, DVN. I like DVN. DVN, Devon Energy. Okay, so you're in DVN at 41. Okay. I'm not quite sure what you mean by that. I mean, other than the fact that you bought it at 41. Here's your high, here's your low. She shoots up, pulls back up. Now she's coming back to the downside. Way, Trinell, how's it going? I get sick since been there 20 years. Too expensive to buy. Not only that, the premiums are horrible. Instagram. I already looked at that one. Alrighty. Apple. Alright. Hey, let's go back to my list. Next on the list is going to be Sony. S-O-N-Y. Sony. Somebody want to take a look at Sony? Yeah, that's going to be a no. Look, it's at the high of the 30-day period. And look how choppy it is. Gap down, gap down, gap up, gap down, gap down, gap up, gap up, gap up, gap up, gap up. Yeah, no thank you. That's too choppy for me. 96.10. The 96 is going for 95. Okay, not quite 1%, but okay. Target been doing me work. Any thoughts on Target? Yeah, I don't like Target. They're susceptible to black swans. Okay, black swan here, black swan here, black swan here, black swan here. 4 of them this year. I got stuck on that one. That one right there cost me like what, $12,000 or $15,000 last year because when it was here, it gapped up 16 bucks, and I had to pay it out of my pocket. Yeah, sorry. Riven lost 18,000. Should I buy again? I don't like Riven. I can't tell you what to do. No, you did not see it, James. This was a follow-up question to my previous one on earnings per share. Well, we did have a question about earnings per share. You asked if I like to look at earnings per share on a consistent basis. I said I don't really pay attention to the earnings per share. I take a look at the dividends. If they consistently increase their dividends, it means they're consistently being profitable. So dividends is a way more important to you than earnings per share. Yep. But I guess in the long run, earnings per share will be the deciding factor if dividends will increase in the long run or not. Well, yeah, you're absolutely correct. So let's take it for instance. GPC, Genuine Parts Corporation, they've been increasing their dividends for over 7 decades. That's 70 years. 70 years to continuously increasing their dividends. Okay. Coca-Cola has been increasing their dividends for the past 50 years. Okay. Clorox, increasing their dividends. There's so many companies that are continuously increasing their dividends. That means to me, it's a shortcut to figure out if they're continuously profitable. Because if they're not continuously profitable, how can they possibly give the investors more and more money every single year? It's just common sense. And I know common sense is not something they teach in school, but they probably should. All right. If they are monthly, then people aren't trying to buy them, also known as low volume. Yeah, I get that. I don't like monthlies because the numbers just don't work that good. Foot Locker puts. Oh, good for you. Apple. What about USDJP? Yeah, no. Americo. Americo? What the heck is Americo? Sorry, dude, I can't find what you're looking for. What stock did you trade today? Today I bought some Dell. 3M. 3M's going to be a no this week. Look where they are. Way up here at the high of the year. Sorry. WBD. 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 Warner Brothers. Interesting. I'm not quite sure what to think about Warner Brothers. Okay, a month ago, here we are at 820, jumps up to 880, drops down to 660, then hits 840, and it pulls back today. I'm sitting at 811. All right, so at 815 with the current price right now, the 8s are going for 20 cents. You do all the math, you're walking away with 5 cents. That doesn't work. 8.5, no. Sorry, the numbers just don't work with them. Hey, Hollywood, we looked at Vail yesterday. It was a no. What software website are you using? All right, user 01 whatever. This is Think or Swim. Think or Swim. You can download that for free and use it for about a month or so for free. I have no idea, Hakuna, what happened to the TV. It's got that bar. I got a new one. I'll be putting a new one in tomorrow. All right. Do I invest in bonds? Hell no. I haven't seen a single bond that offers over 25%. Motley Fool is saying to buy on ASX, CTD, corporate travel, but to me, to chart look awful. ASX. What the heck is ASX? No, it's a monthly. I don't do monthlies. The numbers just don't work. No matter how you slice it, it just doesn't work the same as a weekly optionable stock. I like consistent. Simone, come on, we already did PBR, Simone. PBR. Okay, PBR is going to be a no. Look what happened. Look at this gap up, huge jump. Now she's coming back down again. All right, 1549 to 1550s are going for 14 cents, close to 1%, not quite there. But look, down, up, down, up, down, up. Look at where she is now. She's at the high of the year, Simone. We already looked at that one. Mike, NVIDIA, we already looked at it. No. Do you invest in real estate companies? No. Verizon, Lee, VZ, Verizon. Okay, interesting looking chart. Okay, Lee. Lee, you ready for this? Look at this. We got the 30-day bottom, 39.60, 30 days ago. Shoots on up 5 days later. We're at 42. Big drop to the bottom again. Shoots up, pulls back, shoots up. Today she's starting to pull back. This right here could be the turning point to come back down again. Because you got to remember, investors want to make money. Okay? When the stock is low and then she shoots up, well, we want to take our profits. You take our profits, well, here's the bottom. Buy it there, shoots on up, well, we want to take our profits. Simone, you're welcome. All right. Now, let's go back to the list, because you guys are done asking questions. Advanced Auto Parts, coming right up. AAP. Now, I was into AAP a couple of weeks ago. I got out, got my profits. Thank you very much. I'll look at it again when the dividend comes up again. Okay, so AAP, I might jump into it now. I like that big drop. Okay, here's our high. Here's our low. Here's where it was. Here's where it is. I want to see what this big drop is right here. All right. Currently, 47.70. The 48s are going for 65. That's well over. That's 1.5%. I like 1.5% for the week. Well, let's take a closer look. A year ago, 64.83. Topped off at 88.21. That was the end of March. Look at the last 90 days. Last 90 days. That's the last 3 months. Okay? Down, up, down, up, down, up, down, up, down, up, down. Okay, we have a new bottom today. See, I like 2 days to the upside. Once the bottom is figured out. Well, today's a new bottom. So I'm going to keep an eye on this one for next week. Because next week, once it finds its bottom, she's going to move up. AAP. Well, think about it. Advanced Auto Parts. Well, people like their cars and they need to keep them running. So here's a bottom here. Okay, what happened here? I honestly really don't care. Okay, you make your money when the stock is down and then it goes back up again. This is what I'm looking for right there. All right. Who wants to look at Crowd? Lisa? Really? CROWD? CrowdStrike Holdings? What is going on there? All right. No, that wasn't it. CRW. CRWD. CRWD. There are no dividends in the selected time frame. Whoever wanted to look at Crowd is going to be a no. No dividends. Thank you. Yeah. Happy person, CRWD. No. No dividends. Sorry. And my mouse is acting up. Fuck. Ooh. Sorry. Alright, so what are we doing now? Alrighty. Next on the list, Intel. INTC. Can I join and ask you a question about investing? Some interesting stuff? Sure. Ask away. While you're asking away, I'm going to be looking at Intel, INTC. I like Intel. DJT is going to be a no. All right, here's our high back in December, our low back in August. A year ago, we're at 35. She jumps up to 50, drops down to, what was that, 17, 18? Now we're sitting at 20. Okay, so the $20 is going for 46 cents. That's 2%. I like Intel. INTC. All right. UPST. What the heck is UPST? UPST. All right, so somebody wanted to ask a question. Somewhat. Kraft Heinz, what do you think about the dividend on it? All right. Do you think the 0.6118 is important on big caps on daily time frame? Nope. And do you think charts and TA is important for investing? Nope. Because I think it seriously is. Well, alrighty then. I thank you for that. You have yourself a wonderful day. What's next? Okay, Upstart Holdings. Really? Upstart Holdings? I've never heard of them. UPST. That's why I've never heard of them. There are no dividends in the time period selected. No. Zubilitech. Alrighty. Alfred, he doesn't play fibs, bro. I have no what fibs means. Yes, it is important if you know where to connect to H&L. I have no idea what that means. Brian, DVN. Okay, yes. Estee Lauder, no. LA, maybe. PSNY, definitely no. ESS, definitely no. Laughing my ass off. Okay, lovely. What Samsung? Nope. How about ESS? Nope. Baba? Nope. UPST? Nope. Been a great options play for a few weeks for me. Cool beans. Alright, next on the list is Zim. Now Zim is going to be a no. I don't even know why I'm bothering looking at Zim. Okay. Zim. ZIM. Alright. Now Zim, ZIM, I have no idea who asked for it, but they've only been paying dividends for 4 years. 2 in 21, 4 in 22, 1 in 23, and 1 in 24. Look at these numbers. $2, $2.50, $17, $2.85, $4.75, $2.95, $6.40, and then 23 cents. What are you shitting me? Really? Who came up with Zim? Foot Locker. ADM, Archer Daniels. Oh, I like Archer Daniels. I do. My Tom 85. I like Archer Daniels. ADM. Okay, I don't know what the heck's going on here. Huh. All right, let's take a gander at ADM, Archer Daniels. ADM, Archer Daniels. Take a look at that. Doesn't that look pretty? 30 days ago was our 30-day high at 64. Drops down to 57. Look at this nice 2.5 week uptrend. Could it stop today at 60.56? Well, the 60.70 is going for the 71. Yeah, no. Sorry, Archer Daniels, the premiums are just horrible. Andrea, I buy and sell Zim. Uncle just retired from there. Cool beans. Pfizer, PFE. We'll take a look at Pfizer, PFE, PFE. All right, next on the list, MPW. MPW. MPW had a little bit of an upturn today. Cool beans. Look at this. 30 days ago, down, up, down. This right here. Now remember I say, you make your money buying low and selling high. Okay, here's a high here. It drops, retraces, drops again, retraces, drops down here. Your 30-day, well, not a 30-day bottom, but a bottom right here was Monday. Today was an up day. Well, tomorrow might be a good day too. Don't know. All right. Let's go through the last of the questions and that will call it a day. KMB, Kimberly Clark. Cool. eBay. Amazon's going to be a no. I just did Home Depot. Nice dividend in the option premium. Actually, the option premium for Home Depot is horrible, in my humble opinion. 373. Yeah. All right. See, at 373, Home Depot. See where it is right now? It's at a 30-day high. Okay. See that right there? The one-day pullback. 373. The 372.50 is going for 233. That option is, that premium is crappy. Canada Goose, never heard of it. MJR, no idea. How about Albemarle? Oh, didn't do Apple. Let's do Apple. AAPL. Alrighty. Here we go. High, low. Where was it? Where is it? What direction is it going? Alrighty. Well, there you have it. Apple is sitting at 228 at the moment. So the 227.50s are going for 242. That's about 1%. But here's a bad thing about it. Okay, here's your high right there. Okay, check that out. Your high's here. She drops, shoots up, sitting right here. Is it going to continue going up? Don't know. EWZ, never heard of it. That's been a tough option play for the past couple of weeks. EWZ. Yeah. iShares Brazil ETF. 30 bucks. Okay. EWZ. EWZ. Well, they get dividends all the way back to 2000. 36 to 1 cent, to 64 to 11 to 3, 26 to 1, 46, 58, 87 to 7, 120 to 63. This is all over the place. 42, 106, 38, 13, 85. Oh, hell no. What the hell are you thinking? That's going to be a... Fuck no. Alright, EWZ's a no. How do I start trading? You just dump a bunch of money into a trading account and just trade. How about yeah, no. LOL, yeah, no. AVGO, I like that one. I banked on that one. Cool beans, REIT, yeah. The chart is low. REIT, R-E-I-T. Yeah, no options. I like it when people pay attention. What do you think of Forex? Forex is great for the younger crowd. If you want to sit in front of a computer all day, you can make money. Forex is open 24 hours a day. You can trade 24 hours a day in the Forex market. No, thank you. It's too much work for me. All right, we're done with the questions. See what else we can do. Honeywell. Somebody want to take a look at Honeywell? Here it comes. H-O-N. Okay, here's our high, here's our low, where it was, where it is, where it's going, blah, blah, blah. The high bounces off of there, last 30 days. Okay, it doesn't look that bad, but here we go. 30 days ago, we're at 203. Jumps up to 209, drops down to 196. We're sitting at 206 at the moment. The 206, yeah, no. Sorry, Honeywell, the numbers just don't work. Tesla's going to be a no, they don't have dividends. BMO, what the hell is BMO? BMO is going to be a no. Mesh. Okay? Monthly options, it doesn't work for me. MO, Altria. No, look at the high of the year. Okay, Altria might be in 2 or 3 weeks, but not this week. Amazon. No, what part of no? AMZN. AMZN. Okay, AMZN. Here's your high. Here's your low. Where it was, where it is. The 173 is going for. Yeah, you're 1%, but here's the thing. Amazon doesn't have any dividends. So Amazon's a no for me. How about Key? KEY. Okay, Key's going to be a no this week because look where it is. It's your high of the year was yesterday. No, thank you. I don't buy at the high waiting for it to get higher. Or you don't care. The guy 123. Is your goal to outperform the S&P 500? Well, I outperform the S&P 500 every year. NLY. Ooh, I like NLY. NLY. Okay, NLY last 30 days. Okay, right there we go. All right, NLY might be a little too tight. Okay, 30 days ago at 19.90, shoots up to $20.45, drops to 18.80, shoots on up, pulls back, up, back. Yeah, no, this baby's coming down, in my humble opinion. EMR, Emerson, ooh, Aaron, VOO, hell no. How people trade SPY? Yeah, no, thank you for SPY. ABEV, no, sorry. Dave, sorry about that. ABEV, I've never heard of it. I thought charts don't matter. Why would you say charts don't matter? I've never said charts don't matter. The chart tells me when to buy. I don't buy at the high because I'm not buying at a high waiting to go higher. I like to buy it at a low. So take a look at any chart you want. Okay? Up, down, 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 so on and so forth. That's all they do. Now, do I want to buy at a high? Hell no. I want to buy at a low. Okay, gets to a low, buy, sell, buy, sell, buy, sell, buy. It's really not that difficult. I don't know why adults make it more complicated. This was created for a 9-year-old little girl. Simple, safe, predictable, consistent, no way to lose. Never buy something you don't know. IBEV, never heard of it. VOO, my opinion, piece of crap. Emerson Electric, great company. Let's take a look at Emerson Electric. EMR. EMR, great positioning. 104, the 104 is 70 cents. Yeah, no thank you. VOO's a no. It's a big turd if you ask me. No one outperforms the US 500, not even hedge funds. Okay, out of curiosity, S&P 500 average return over the last 20 years. All right, S&P 500 average return over the last 20 years, 9.75%. Are you trying to say I don't make 9.75%? Well, just for the fun of it, let's go here. Currently, I list every single one of my trades online for everyone to see. Starting out in January 1st of this year. Okay? Week number 1, first quarter. These two accounts. 2.12%, 2.99. 1.3, 2.43. 0.85, 1.35. 0.9, 2.78. 1.03, 1.62. 1.06, 3.68. 1.9, 2.57. 2.03, 2.02. 2.32, 3.73. To make a long story short, you can go through the whole thing if you want, But let's go all the way up to the top to find out what the running tally is. Okay, at this moment in time, account number 1 is up 46%. That's more than the S&P 500. Account number 2 up 69.5%. That's more than the S&P 500. Account number 3 has only been in what do you call it? This is the second month. Okay, the second month for the account number 3. It's up 9.5. That still beats the S&P 500. Tommy, when do you typically dump the stocks you are selling calls against? Well, John, the way it works for me. Okay, hold on. Let's go back to here. Okay, so here's Emerson Electric right here. Nice time to buy Emerson Electric, by the way. Take a look. 30 days ago, we're at 119. She drops down to below 100. Slowly going to the upside. Right now it's at 103.86. The 104 is going for 70 cents. That's a 0.5%. I'm going to say no to that one. What I normally do, let's go to one that I like. I like Macy's. Okay, so here's Macy's right here. Macy's right now is at $15.36. I will buy it at the current price. I will sell the closest strike price at this moment in time is the $15.50, and that's going for 20 cents per share. Now, I sell a covered call against it. Now, if I buy it at $15.43, and I sell the $15.50s, if on Friday it's above $15.50, I'll let it go, and then I'll be back into cash on Monday. If, however, it's at $15.49 come Friday, I will keep it, and then next Monday I will sell another $15.50 against it, and I will continue selling the $15.50 against the current position until it gets filled at the price that I want. Bart Decker, charts don't lie. Well, you're right about that, they don't. But the guy 123, apparently you don't like my math. What's the right screen showing? Oh, that is the option chain. Okay, so I do stocks and options, specifically dividend stocks with covered call option writing. So covered call option writing is one of the safest strategies there is. So if you buy a stock and you sell an option against it, the one I was just pointing out, Macy's, if I bought it at $15.43, I sell somebody the rights to buy it from me at $15.50, and I collect 20 cents per share. That's over 1%. That 1% per week comes to over 50% per year. So that works for me. Simple, safe, predictable, and consistent. The only stocks I look at are companies that have consistently increased their dividends. I find a dividend increase is the shortcut to profitability. So if a company is consistently profitable, well, they'll consistently increase their dividends. If they cut their dividends, that means they're not profitable. That means they're off my list most of the time. Okay, Mark, I don't do Forex. Charts don't lie. Thanks, Bart. Tarsha, nice to see you again. Can you explain what the blue, green, and red means on the chart? Well, absolutely. Let's take a gander. The blue down here is the volume. That's how many shares are traded on a daily basis. You can also go up here. 5.66 million shares were traded today. That's this little tiny blue line right here. All right. If I slide over to here, the volume on that day was 34.9 million. That's a lot of shares traded. So the blue is how many shares are traded. The red is usually a down day. Okay. The green is usually an up day. Okay. Now, reading the chart, you'll see they look like a candle. Okay. The wick on the top and the wick on the bottom. The wick on the bottom represents the low of the day. The wick on the top is the high of the day. The horizontal line on the top of the green candle is the opening price. Wait. Is the closing price of the day. And the horizontal line on the green, the bottom, is the opening price. So here's the opening price, here's the closing price. There's the high, here's the low. Now red is almost the exact opposite. Okay, top of the wick is the high of the day. The bottom of the wick is the low of the day. The horizontal line on the top of a down day or a red day is the opening price. And the horizontal line at the bottom of the candle is the closing price. Okay? Now, we're past 11:30 and we're below 200. Anytime we're below 200 at 11:30, time to go. We'll be back here again tomorrow. So you guys have a great night and we'll see you unless you do options. Aaron, I do options. CIBC, never heard of it. You're riding hard with ALT. Never heard of ALT. That's a no. Do you use indicators? Uh-oh. What do you think of VTASX? No. Keeping it real, using Thinkorswim. Thank you. Dell 107, 38 section. Thoughts? Okay, I got Dell at 111. Okay, you got Dell at 107. That's a better deal than I got. NEP Energy, never heard of them. That stuff is priced in. I have no idea what that means. Everything you think and say is priced in. I have no idea what that means. Everything you think and say is priced in. All right, whatever. Always remember to take your profits. Thank you, Lisa. It's not a profit till you take it. Buy and sell options, I do. What are your thoughts on VTASX? No. Reggie Bo Jackson, dude, I haven't heard from you in a while. How are you doing? Have a great night, Ernie. You too. Thanks. We at 200? No, we're not. We're at 175. Do you use RSI, Relative Strength Index? No. I used to, but not anymore. Why no to VTASX? VTASX. Is that right? VTSAX. VTSAX. Are you ready for Jacob? Are you ready for this? Number one, it has no options. Number two, what the hell is that shit? Okay? Now, I'm not quite sure if you understand that terminology. What the hell is that shit? It kind of direct right to the point. It makes no sense whatsoever. Where's the highs? Where's the lows? Where is the movement? All that is just, they call those dojis. It opens and closes. No. What the hell are you thinking? They are trying to buy 7-Eleven. Okay. Ticker IOT. Never heard of it. How can I learn to trade? Well, keep coming back every night. Keep asking questions. What about NVIDIA? NVIDIA is a no. Jay, now the reason why NVIDIA is a no, let me explain to you. At $128 a share, which is the current price for NVIDIA, the dividend for NVIDIA is 1 penny. That's it. You're paying $128 to catch 4 cents per year. No thank you. Not worth my time and effort. Also, NVIDIA at $128 a share has a book value of $2 a share. $2 a share, that's a long freaking way to drop. Apple, we already looked at Apple. WTHITS. Tatcha, I have no idea what that means. What do you think about the Strat? I don't know what the hell a Strat is. How can I become more precise at entries? Hey, Jason, you do realize when you're playing the stock market, I like it what, hold on. McCoy. Was it McCoy? The engineer? Who's the engineer in Star Trek? McCoy. Wasn't it McCoy? Anyway, he says it's kind of like throwing a dart at a dartboard on the side of a train while riding a horse blindfolded. There is no good... I don't know about your entries. Really, I don't. You make money when you buy the stuff. Which broker is good for a beginner? Ooh, that's a tough question. RCL, never heard of them. Plantair, yeah, no thank you. Tesla, no dividends whatsoever. Tesla going to go to all-time highs in the next year? No idea. I don't do Tesla. Tesla doesn't share their profits. That means it's a no. Okay, why would I invest in a company that doesn't share their profits with me? GHI popped up recently and looked interesting. Have you looked at that? Never heard of them. That means no. What do you think of CMBT? No. Euronav? Nope. Apple? I like Apple. Scotty? Okay. You're right. Scotty was stock check engineer. You're right. So you just do dividends? Blue Origin, I do dividend stocks. Okay, now dividend stock are companies that actually share their profits. Okay, I'm 60 years old. I'm retired. I have no desire, nor do I want to put money into this company and wait 3 to 5 years to do something. No. Bitcoin, no. Thoughts on buying midweek? Depends on the numbers. Tasha, always depend on the numbers. Royal Caribbean, I like it, but we'll look at it tomorrow. Do you own any growth stocks? Not at all. I'm not into growth stocks. Growth stocks is a young man's game. Okay, I'm only 60. I plan on living on 30, 40 years, but I have no desire to park my money someplace and hope someone does something. I'd rather take my own initiative. What are your top 5? That would be Macy's, Nordstrom's, Kohl's, Walgreens, and Comcast, I would say. PDD, never heard of them. I assume he meant option straddle when he asked you. Yeah, don't get me wrong. I only teach one strategy here. And there's a reason why I only teach one strategy here. My opinion on this is a stepping stone, okay, for people who want a safe, predictable income and just getting started. It's one of the safest trading strategies it is. Told you Kava hit 127 on my 100 call. Well, cool. I don't do Kava. I haven't been around long enough. What bank would I recommend? Okay, I have a difficult time with banks. I do. I use Navy Federal and Santander. But you only buy dividends. No, I only buy pre-qualified dividend stocks. WFC. Isn't that Wells Fargo? Isn't Mara considered a growth stock? It could very well be. Straddle isn't profitable long-term. Short-term strategies that may or may not pay. Yeah, straddles needs more time and effort to be put into it. CLM, I've heard it, I looked at it, but it's not on my list for this week. You've never day traded? Yes, I did. Don't like it. We're at 200. Yep, I see. Well, yeah, we're at 200, so I'm here a little bit longer. Carvana stock? Nope, hasn't been around for 20 years. Now, see, the funny thing is, what you guys aren't quite grasping, this is your money you're talking about. You could put your money anywhere you want. I like Marathon Oil. I made lots of money off of Marathon Oil, and I continue to look at it. Are there any good tech stock dividends? Yes, there are. What about buying some NASDAQ? I don't look at it that way. SoFi, I looked at it, not 100% a fan. Wells Fargo, I like Wells Fargo. What were we talking about? Yeah, Carvana. No, it doesn't have 20 years of increased dividend. Now, see, what you guys don't understand is your money, you do what you want with your money. Really, seriously. But ask yourself a question. Why would you put your money into a company that's not consistently profitable? Look at Bank of America. They've been around for 100 years. Wells Fargo, they've been around for 100 years. Okay? Clorox, Capital One Finance, they've been around for 100 of years. Summit Therapeutics, no. Do you scalp? You could say that. And you, interesting, less than 200. Squirrel, yep, sorry. All right, so it's less than 200. We're out of here. You guys have a great night. It is 10 minutes to 12. I'm going to turn into a pumpkin. Not a pleasant sight. You guys over here in Facebook, have a nice night. Instagram, see you later. TikTok, you guys have a lovely day. YouTube, bye. And down here, you guys have a lovely night. All